Welcome, welcome, welcome. It's Canada Startup. It's Tuesday night. Hello, Bill Wilson. How are you today?
Doing well, thanks, Dave. Looking forward to another fun evening.
And tonight we have a special guest, Miss Sharon Filmore. How are you today, Sharon?
I'm very good tonight. Thank you, Dave.
Fantastic. The topic, invest for retirement, financial literacy, financial curiosity, and practical investing. This is Canada Startup in collaboration with leadpedalradio and Continual Shift on YouTube. And Bill, when you think about investing and the investment journey, what's the first thing that sort of comes to mind?
Well, a few months ago, before we started doing this, the journey was scary and I felt it was very difficult. But from what we've been, what you've been teaching and what I've been learning and all that, it's actually becoming a lot easier. And we have more that we can do ourselves instead of relying on others and sort of putting our money into other people's hands and not controlling that. So yeah, investing I find to be fun. When I hear that word now, it's fun.
And Sharon, where are you with the whole idea of investing? I know you've had a fantastic success and career in real estate investing. How about stocks and different types of...
That's where I get scared. Yeah, I really don't understand them. So
yes. And so that's what today is really about. It's about an opportunity to share a little bit about the investment universe, talk about companies that we all know, and then create some opportunities for first some paper trading. So I noticed you got a pen and paper, and that's fantastic. Inviting any of our watchers, our viewers to get a pen and paper and maybe follow along with some notes. And we'll talk about companies that you know, and we'll talk about different types of analysis that will allow you to get out of paralysis and into action. And so I've got a little slide that I'm going to share here that allows us to move into the first perspective of different types of companies that you might consider being an owner of. And this is the concept here is, wouldn't it be cool to actually start seeing yourself as an owner of all these great companies? And that's what we're looking for today is opposed to feeling alienated from these companies. No, in fact, we're inviting you to be an owner of these companies, and that alone will tap you into a whole new realm of information. And that's what we're really looking to do today, is to talk about companies. You see some here. When you see this list of companies, Sharon, is there anyone that you might be interested in, or anyone that you're very familiar with, perhaps?
Yeah, the only one I'm not familiar with is Grab, which is
so you're familiar with Google
mm-hmm.
and Shopify
mm-hmm.
and Facebook.
Yep.
Bill's favorite is Disney, Amazon, and Apple. And Grab is actually a app business, transportation. So it's that opportunity to call a cab very quickly, get a cab, get your food delivered, and that's the Grab stock investment. Yet, if you were to look at those companies right now, Sharon, what one might be most interesting for you, or the one that you like the most?
Would probably be Disney, actually.
Oh.
Or Apple is been really, really successful, and so is Shopify. So, and Google, Google and Amazon are. But yeah, it would probably be Disney. I love Disney.
Okay. Well, Bill, what would you say about that?
I totally agree.
Yeah.
There's lots there.
So one of the things that we're looking at is to get you interested in the companies and the products, and you're already interested or probably using some products. So one of the first things that I like to do, especially get people a little excited about being involved in the stock market, is to get them maybe looking at making an investment or two into companies that they're already using their products. And wouldn't it be cool that if in the next year you started to buy perhaps Apple, perhaps a share or two a month, and by the end of next year, your next Apple phone, you look at your account and you go, oh my goodness, I can afford to buy a phone from my profits.
That would be cool.
that is what that's how this process started. It was originally started when my son was about 11 years old, and I wanted to introduce him to things. So his first stock he bought was Apple. And if you take a look at what Apple's done in the last 10 years, you go, my goodness, it's paid for a few phones.
Oh my goodness, yeah.
And then what started to happen is, as he started to look at different stocks that he liked, he started reading Forbes magazine and came to me with products and saying, wow, look at this product, we should buy it. And I said, well, why don't we try the product first? And that was SodaStream. And so we went to a department store in Singapore. We tried out SodaStream's product. We liked it. We bought the product, but we then went home and also bought the company, made an investment in the company. And within 3 months, he got his machine for free.
Wow.
And so that's a little bit of the story behind the story. And that I really am inviting you now to perhaps write down today. One of our missions is for you to come away with 5 or 6 companies that you might go do a little more research, you might have some questions. And then if you look at Wealth Simple, which is an app online on your phone, it just started something that's called fractional shares. In America, fractional shares has been available for free for investors for the last couple of years. But in Canada, it just started in the last month for you to buy maybe just 10% of an Amazon share, which would be about a $350 investment. And so it allows you to have a portfolio at whatever size you want. And what I'm encouraging people to do is to start looking at it as a new relationship with companies, a new relationship with investing, and start small. And because Wealth Simple, it's 0 fees in transactions, you can actually start to gamify it a little bit so it can be a game on your phone.
Are you telling me there's no fees at all?
Correct.
Wow. Okay.
What's been your experience with Wealth Simple, Bill?
It's so easy. I've really enjoyed it. I guess the one little bit to add to that, though, Sharon, if it's no fees when you purchase Canadian stocks.
Oh, okay.
Okay, so if you're looking like Disney, for example, you're buying an American stock. So it has to be listed on a Canadian exchange. So Toronto, Vancouver, that sort of thing.
Okay.
That's where your freebies are. If you can buy the American ones, there's just, exchange, and I think there is a fee. I haven't dabbled in that part yet, but there are some extra charges going that way.
Okay.
But I still consider myself a rookie here with this. So I'm focusing strictly on Canadian stocks. So I haven't encountered any fees. So there's a lot of fun stuff, and I'm sure Dave will get into that as we go on.
Okay.
Very good. Well, actually, it's again something, Sharon, that was introduced to me by my son. He started using Wealth Simple because the young ones are much more fluid with that. I have got a traditional Royal Bank Action Direct account, and that's what I've traditionally done it. Yet when Justin introduced me to Wealth Simple, I decided to download the app and get started. And it really has been something that when I'm shopping or I'm doing my Uber driving for my parents, and I'm sitting there, I'll just be doing a few trades because the in and the out, it's no commissions, which is a nice new add-on to the platforms that the young ones really like. In America, the most famous is called Robinhood or Webull, and the one here in Canada is Wealth Simple. And we'll put the link below the conversation today for people to download it for themselves.
Okay.
And then, so I'm going to get back to this little slide, and I'm going to ask you to, of those 6 companies, pick 2. That if in the next 6 months you were a proud owner of 1, 2, or 10, 100 shares, it might be something that could be really cool.
It would have to be Disney and Shopify.
Very good. So Disney and Shopify, put them down on your piece of paper. And when you think of Disney and Shopify, what space are they in? What type of businesses are they?
One's entertainment and one's products.
Very good. See, this is what's fascinating is that quite often we're not too familiar of the industries because especially with technology, industries are becoming much more overlapping. And I did a slide here that let's just see if that can come up here. that when we talk about Amazon, it's really a distribution retailer, but it's also got billions of businesses in web services. We talk about Grab, which is a transportation and a service provider for eating. We talk about Apple. Apple, many people don't know how to describe Apple these days, but they've created a retail ecosystem. We talk about Disney, mass media, entertainment, but then they've got the ships, they've got the cruises. And then we talk about Facebook, social media, a platform, a Shopify business platform to allow entrepreneurs to do transactions, get their inventory systems. How would you describe Shopify, Bill? Because you've been using Shopify. They're a business partner of yours. How would you describe Shopify?
Definitely a business platform, but I would also even add on education, because you don't, with all the stuff that's available, like through YouTube and that sort of thing on the different training solutions, or just even the videos they have on small topics, you could go and build your own thing. You just wouldn't have all the Shopify stuff behind you, but there is a good educational or training component behind that as well.
And then we talk about Google. How do you describe Google? And a search engine, but it's also got YouTube, the digital cloud, all the videos, and so it's these companies are again the top companies, often referred to as the FANG, which is Facebook, Amazon, Apple, Netflix, and Google, and then they throw in Microsoft. Those are trillion-dollar businesses. Having one or two of them in your portfolio does make some sense. So let's just pop over to the next topic, which is great. So you've got two there right now. You've got Disney, you've got Shopify as two of your potential first part of your diversified portfolio. Today's mission is to come up with 6 or 7 shares that you might start a relationship with. And then if you got any questions, we'll also be able to have regular quarterly meetups and actually answer any questions to expand that also. So the next area, which is something that's very important from my perspective as a risk-averse investor, is a topic that I really love because I've been an investor in it for almost 40 years. And it is the banks. I am inviting you to be an owner of at least one financial institution. Now, whether that's CIBC, TD, Royal, which bank do you use?
I use 3 of them.
Excellent. Which one do you have a favorite, or do you have 2 favorites?
Probably 2 favorites. That would be the Bank of Montreal and Scotiabank.
All right, so BMO and BNS. Now, when you have deposits, your money's with them, how much interest do they tend to give you for your deposits?
Anywhere between 0 and none.
So 0 and none.
No,
now,
it's such a small amount that it's so minimal, right? That it's
correct. Now, if I was to share with you, though, if you, instead of having deposits, say you just have 10 grand sitting with them for safety, right? Mm-hmm. If you put that into BNS at $77 right now, do you want to give a guess what they will pay you in dividends?
I never realized the shares were so low. I double? I don't know.
Bill, what do you guess? I'm going to say BNS is at about 5.5% dividend.
Sharon, would that shock you that the banks are paying 4 or 5%?
When they're giving out less than 1% to most.
Well, when you have deposits with them, they pay you 0 to perhaps 1% if you've got a term deposit. But if you own their shares, they're going to be paying you. BNS right now is 4.69%.
Wow.
And you get the opportunity, of course, if it continues to grow, you're part of the ownership and your shares could go up, they could go down. Yet that's what's really attractive about the Canadian banks right now, is that most of them are paying 4 to 5% on a quarterly basis, which is something that my 82-year-old mother was quite surprised. So I've introduced her to some of these investments where she's now getting 4, 6, 8, 10, 12% on her money.
Wow.
Yes. So I am inviting you. You've said two. You said BNS and BMO. Let's put one of those into your diversified portfolio, and then you can do a little more research, and we can get back on that. So if you can have both if you want, because you've got such a beautiful opportunity right now, given some of your real estate moves, to have more than one bank. Yet I'm suggesting one.
Okay.
Any one that you might want to suggest?
Well, I'd like to look and see what. So BMO is probably offering the same. As I would sort of compare the two. I've had a lot of dealings with Scotiabank in the last 5-6 years, and they've always been really, really helpful. Whereas, and it's like I use the different banks for different things, right? There's, depending on what they're offering and what their strengths are.
Just to give you a little scan of the BMO that's trading right now at 122.37, and its dividend is 3.46%. So about 1% lower than our friends. So again, something, you're right. We'll do a comparison. You can choose one. You can start with 1 share, 10 shares, 100 shares, and that's how you would move in with your first financial investment. And then my next question to you would be, if you think of Canadian companies, do you have any favorite Canadian companies or companies that you think are really high quality companies here in Canada?
I'm just thinking, well, anything in the IT is usually pretty awesome.
Any names, that companies that sort of come to mind? And Bill, you can help out here too. What do you see as top Canadian companies?
Well, Bell would be one that I would consider. TELUS. I'm looking way down the road, but I'm hoping BlackBerry will come back. But yeah, definitely Bell and TELUS for sure.
Yeah, Bell and TELUS. Yeah, and you have Enbridge up there. Enbridge is, I know they're right now in a legal battle with hang on, can't remember one of the states because of their pipelines. So I'm not sure how that's going to pan out. Would like to sort of see how that works in the future, but I think that because they supply pretty much all of Ontario and mostly Quebec, just in this area, it doesn't count what they do in other parts of the country. So yeah, and it's a good Canadian company.
So would it surprise you, because you're absolutely right. So keeping like when you become a shareholder, you start looking at information, you start realizing what's going on in their international business. Want to guess what dividend that Enbridge pays, Sharon?
Yeah, out of curiosity.
Give me a number. That would be pretty cool to explore.
I don't know, 6 or 7%.
How about 6.93?
Oh, so I was good there. 6.93.
Yeah, so its shares right now is $48.23, and it has a 6.93% dividend. Bill, I think you made Enbridge one of your first investments. Sorry, Sharon, did you have a question?
Yeah, I'm sorry, I didn't hear you say what the share. What each share?
$48.23.
Okay.
Bill, what have you done with Enbridge? And share a little bit about, because I think it was one of your first stocks you ever bought.
Yeah, actually, it's been doing well, and it's fun to see the dividend every quarter. And just when I have the extra cash, that's where I'm putting it into Enbridge. Okay. It's from the research that I've done on it, it's been paying dividends for many, many years, so that's always a positive thing.
I believe it's called one of the Canadian aristocrats, which means it's paid dividends for over 25 years.
Oh, wow.
Bell Canada is in a very similar boat, and that's one of the nice things about Bell, whether you like the service or not, could also come into your decision, because there's some people that have been so upset with the service that they don't want to own the shares either. Yet Bell right now has a dividend of 5.66%.
Wow.
So what we're sharing with you here a little bit, Sharon, is that stocks, many people think, oh, it's so risky. But if you choose a conservative portfolio, you could be getting regular dividends, quarterly, monthly, depending on how they pay. And it diversifies your risk, mitigates some of your risk, and allows you to have a portfolio that start giving you cash flow instead of just benefiting from capital appreciation.
Wow. Yeah.
So of Bell, Enbridge, TELUS, say Manulife, which one are you interested to explore a little bit more?
Well, it would probably be Enbridge because I've already been looking at them, or Bell. But Manulife is huge. They have, they're huge in not just life insurance, but in health insurance, and they have many facets. So I also have some mutual funds with them, actually.
Yes, that is definitely one of the things that they've done very well is into fund management. And so, yes, they've got a lot of funds, and that is something that also in your portfolio you could have a relationship with Manulife. You could have a financial advisor. What we're really suggesting is instead of giving all of your financial responsibilities away, bring them back in and allow it to be more of a game for you, but also along your financial literacy. And that's one of the things that I've noticed with people is that they like to give the responsibility for their money, their responsibility for their health away instead of taking it and walking, singing, dancing with it themselves.
Yeah, actually, and that's true. And that's one of the reasons why I've decided I really want to learn about stocks, because I have been that person that said, let's give this away because I don't understand it. Let somebody else handle it for me. And now that I've been investing in real estate and learning more, it's sort of like, okay, it's time for me to learn about this and start to take control over my own finances.
Let's just give you the background on Manulife. It's $23.54, and it has a 4.76% dividend. So like you were saying, it's very strong. This is why we wanted to bring in 3 strong Canadian companies, strong assets, strong capital, profitability, and then give you the opportunity to say, okay, for today, I'm going to just pick this one, but I'm going to go do some more homework.
Yeah. I like this. Yeah.
Which one would you like?
Well, I can only choose one.
Just for this little exercise.
You know what? I think I probably would still go with Enbridge.
Right. And guess what? The funny thing is that if you decide, and this is one of the things that's nice about your situation, is that if you decide to create a dividend portfolio, you might decide to get all 3, because then you might put in 10, 15, 20 grand, and that will give you $500 a month in dividends. And that's something that people do, is they create a nice dividend portfolio. And so that's something we can talk about. But today, the focus was really on bringing a diversified portfolio. And so the next one we're going to just chat about, which is a fun thing that Bill liked this topic. It is the sin stocks. And we do encourage that even if you don't believe in any of this, to have one stock in your portfolio that is considered somewhat of a sin stock, unless you're totally against sinning at all, yet they do provide you with lots of good information. Because one thing, as soon as you own these stocks, they start sending you their annual report. They start giving you information. If you read the first 3 pages of the annual report of these companies, they're telling you their 5-year strategic plan, their 10-year strategic plan. So that's something that's so valuable about when you become a stock owner and an investor, you actually become a better entrepreneur, because you just start tapping in to the best minds in the world. And that's something that I've really encouraged entrepreneurs to do throughout my coaching programs. So I put a couple here. We got gambling. That's Wynn Hotels in Vegas. We have Booze, which is Bud Light. We have MJ, which is now not only medical marijuana, but all of the different types of medicinal, but also pleasurable. And then I threw in big pharma here, given that I know you've got a background in medical, whether pharmaceuticals you look at as being a sin or not, that's strictly up to the individual. Yet the thing that's good about some of the pharmaceuticals, like Pfizer, for instance, is that they have quite a high dividend. AbbVie has a very high dividend, 4, 5, 6% sometimes. Yet if there was one there that would be of interest to you, what might it be?
Bud Light, the booze.
Bill, tell me which one you picked.
The same one.
The same one. Same one. I like my beer.
And which company did you pick, Bill?
I was first off, I've chosen Molson's.
Yeah.
Molson Coors.
And you remember the code?
TAP. TAP.
All right, so we're gonna.
I think I'm right.
Type in TAP there. So that's Molson Coors, Sharon, because we've had a big coming together of the big beer companies in North America, and so TAP TAP trades at $50 right now. It doesn't have much of a dividend, yet it is a top brewery in North America.
So Molson Tap is it?
It's the code would be like if you went on to Wealthsimple, you would type in TAP. That's the code.
Oh, okay.
And the other one that you might consider would be probably not being Canadian. We don't often consider Budweiser as a beer, but that
Very
is
true.
the competition, and that's BUD. That's Anheuser-Busch. And that has a small dividend, 1.76, and it trades at $66 US.
Okay.
So for the fun of this, shall we put down TAP?
Sure.
All right. And so right now you have got yourself a pretty good looking portfolio with Disney, with Shopify, with BNS, with Enbridge, and TAP. Any feedback on that, Bill, so far?
I think they're a lot of fun. It'll be fun going through all those. You'll start to look at them a little differently now, especially like for Enbridge, when you get that first little dividend. It might only be $1, might be 50 cents, whatever, but it's fun to see them coming in.
Yeah, it would be. Okay.
And so the next little question really kicks off is, what about, is there any other topic or any other sector? In discussing this with some people, I do talk about dividends paying, high dividend paying stocks, ETFs, exchange traded funds, or other sectors that maybe you're interested in, or any type of investment that you wanted to maybe bring to the table to have a little discussion about.
Could we talk a little bit about EFTs? I've looked at them, but I still don't fully understand them, I don't think.
Okay. Bill, have you made any investments in ETFs yet?
Oh, yeah, ETF, sorry, yeah.
Exchange traded funds.
Yeah, the first one we did was the Canadian Bitcoin one, BTCC.
Correct.
Yeah.
And so, Sharon, okay, you were asking about ETFs, or were you asking about NFTs?
I'm not sure. I thought it was ETFs I was asking about. But what is an NFT?
Non-fungible tokens. This is what's been happening in the last 6 months when Bitcoin was becoming super hyped and went up to 70,000 Canadian. There was a market for art that were put on the blockchain, and I believe a piece of art sold for over 70 million US dollars, and it was simply a digital recording. So that's NFTs. Yeah, I think you're asking about ETFs, which are exchange traded funds. And what Bill just introduced you to was it's the first exchange traded fund for Bitcoin. And the code is BTCC, and it is traded on Wealthsimple, and you could go and put in your first $100 or $500 or $1,000 into a exchange traded fund that allows you to own a fund that owns Bitcoin.
Oh, okay. So that's what ETFs are. So you own a fund that owns
the underlying.
The underlying. Okay, that is easy to understand.
Yes. And so there's ETFs for almost anything you could think about. There's gold ETFs, there's silver ETFs, there's medical ETFs, there's pharmaceutical ETFs, there's
So
ETFs for the Toronto Stock Exchange, the entire exchange, the Dow, the Russell 2000. And so this is a manufactured or orchestrated fund that allows people to buy and sell the underlying, which is in the fund.
okay, so then what is the difference between it and
a mutual fund?
Yeah, not mutual. Why did I forgotten the name of it? I should remember it. When big conglomerates put a whole bunch of funds together, hedge funds.
The difference is a hedge fund would be managed by a fund manager and traded actively without having as much disclosure as an ETF.
Oh, so it's not transparent.
Correct. An ETF is quite transparent. It's traded on the exchange. It's quite regulated, and it has a pretty much a transparent. You are given a lot of details of what it's holding. Whereas a hedge fund, they are able to get around quite a few of those regulations, and they don't have to tell. They do have disclosure rules. Yet when they have an ETF, an exchange traded fund, they've got a lot of regulations they've got to abide to.
Oh, okay. So it's all right, because I've heard good and bad things about hedge funds. That's why I was trying to sort this out. Okay, so if you want something that's really transparent and you want to look after it yourself, then you're going to go look at an ETF.
Many people will invest purely with ETFs because it takes out the single stock risk. Mm-hmm. And so if you didn't want to have the risk of Bank of Nova Scotia, you could buy a fund that is just the Canadian banks.
Oh, okay.
And that's one of the things that you may consider doing. If you wanted to have an investment in the marijuana industry, there is a fund that just focuses on all of the different Canadian pot companies.
Oh, okay. And then, so do they then pay dividends, or do they pay?
The one that we're going to talk about is, I think, Bill, it was one of your first investments, FIE.
Yes.
What would you be able to share about FIE?
FIE, actually, for me, it was a great way to sort of, dip my toe into the water and try this. And the other fun thing about it is that it pays a dividend monthly.
Oh, okay.
Yeah, so I think it was like $7 or $8 for the first share, and then you get a dividend paid monthly, and every month I see a little email come through, and there's my dividend. So it's a lot of fun.
Oh, good.
And so that's the one. Again, it's funny, Sharon, because that's an introduction to me into ETFs in Canada by my son Justin. He told me about FIE because at the time it was paying over 7% for dividends. And I didn't know that there was very many stocks that would pay over 7%. Yeah. And now it's paying 6.09. So it's still, for Bill, every month he's getting 1/12 of 6% monthly. Mm-hmm. And so if you have $1,000, you're 600, you're getting about $50 a month.
Wow.
Not bad. Not 10 grand, I guess. Yeah. So that's an example of a exchange traded fund in Canada that's paying monthly dividends. And what's been popular, Bill, did you buy ENS?
Yes, I did.
Share a little bit about ENS, because this is going to be our last one we'll talk about tonight. Sharon. ENS is an ETF. Cheryl, go ahead and share about that, Bill.
Actually, no, you can go ahead. You go ahead on this one.
All right. So ENS is a fund that was set up using Enbridge as the underlying. And what they do is they trade options around it. And by doing that, they're able to give the investors a very, very healthy boost to their dividend. Does that make sense?
Okay, so they trade options around it.
Correct.
So like all the things that go into Enbridge?
No, what they'll do is they'll own Enbridge shares that gives about a 7% dividend. And then by what's called writing covered calls, which is a type of option, they're able to receive premium that gives them a higher return that then they give to their investors.
Oh, wow. That sounds awesome.
And it is pretty awesome because right now their dividend, let me just check this. Bill, have you got that one up there? Okay, there, I got it up there. So it goes from, if you own Enbridge shares, when it goes up, you benefit. The dividend's pretty solid at 6.93. If you own ENS.TO for the Toronto, it's a exchange traded fund focused on Enbridge. The return, want to give me a number that might excite you?
Well, so you said it was trading at what, 6 Enbridge at 6.93, so what, 8%?
10.83%.
Oh my goodness, that is awesome.
Yes. And so that's one that I put my mother into just a little bit, because my mom got really interested in Wealthsimple. She wanted to experiment. She got interested in Bitcoin. She wanted to experiment. So she put some money with Justin, and then I set up an account with her on her Wealthsimple. And ENS was one of them we put in because she wanted to get some monthly income to pay for Disney Plus. And so this last week, she just got Disney Plus.
That's brilliant.
That is, yeah.
Because she's now getting dividend income monthly that covers her Bell Canada subscription and her Disney Plus.
Oh, wow. That's pretty awesome.
And that's the fun of it. Is that if you could figure out a way that if you start creating this little cash flow, because a lot of people who've sold a house or are getting close to retirement, they're sitting on deposits with the bank getting zero. Mm-hmm. What would happen if they started to move it into 4, 6, 8, 10% interest? If you think about it, and again, I'll use a big number, say $100,000. At 10%, that's 10 grand dividends.
Wow.
That's like $900 extra a month. So that's sort of work towards. Like if that was our plan over the next 3 years to get to that, that's pretty cool, right?
Yeah, that is.
The first step is like Bill's done. He's made his first 5, 10, 15 investments. He's got his dividends coming in, and everything's done at a pace that he gets to learn, gets to ask questions, and gets to have some fun.
Yeah, which takes away the fear, right? Of
Yeah.
Well,
I guess
this makes it easy. Like these funds are. I mean, there are things that you can see. I mean, we've had them in Canada for like eons, so it's not like they're going away anytime soon.
I would raise the flag. Always the red flag for me is you don't want to invest anything that you can't afford to lose, especially in the stock market. So I'm risk averse and I'm looking at risk mitigation strategies. Yet you start a process where you can learn, and yet sometimes when you learn, you sometimes make mistakes. Yet this isn't about making mistakes and you're going to suffer for it for the rest of your life. And the mistakes you're going to make are, okay, well, I might have to sell that to buy that. So that is a little bit of the investment. Wealthsimple makes it quite nice. Yet again, I wouldn't put everything into Wealthsimple. Yet as a great place to start investing, it might be the place to start.
Okay. So you use other platforms as well then?
Absolutely. I use Action Direct. I use Questrade. I use a couple of other platforms to invest. That's also very useful as part of your whole financial plan.
They're good to know.
I've encouraged Bill to get onto. Are you using TD, Bill?
Not yet.
Yeah.
Not yet.
That's your main bank, is it?
Yes.
I actually have a TD account. No, don't use it. But I actually got one. I went that far one time.
Yep, it's very famous in America, TD Ameritrade. I think it's called in parts of the world sink or swim. Yet TD has a very nice platform online. They all do. All the Canadian banks have online trading. That's when you start paying for your trades. It's anywhere from $6.95 to $9.95 to $19.95, depending on the size of the trade.
Okay.
So, as a little recap, I have a feeling you've got yourself some interest around Disney, Shopify, Bank of Nova Scotia, Enbridge, CAP, and perhaps the last one you might take a look at is either FIE or ENS.
Okay. So FIE, what is that? What kind of stock is that?
That's an exchange traded fund,
Mm-hmm.
and it's primarily around financials.
Fine. Okay.
So it might actually hold all the banks. I would take a quick look at that before I put any of your funds into it. It probably is it's quite conservative,
Okay.
and there are quite a few really good dividend payers. Yet as a starter, that's where Bill started, to be honest with you. A year ago, that's where I started, and I played quite a bit. I still have 2 small holdings in FIE, yet I've moved it into higher yielding dividends, which we can talk about in a future session.
Okay. That sounds good.
So Bill, given that we're going to start with fractional shares with Wealthsimple, what might be a fractional share that you might invest in the next couple of weeks?
Definitely Shopify. And I'm thinking possibly, like, we're doing a lot of stuff with Amazon now. Like, we've got the Amazon Prime, so I'll probably look at that as well. And like you say, I mean, they're mostly growth stuff, but if we can make enough during the year to pay for Amazon Prime, then we're laughing.
Mm-hmm.
One of the things that's really nice, guys, is that given the volatility that we're having right now, I don't know if you've noticed, but 2 days ago, the market was down almost 7%, very, very red day. And today was up about 6%. If you have one of these red days, one of the secret strategies is when you see the market crushing like that, see if you can buy something. It goes against the grain, yet quite often, like yesterday, you bought it at minus 8%. Today it's at 8%, 16% in a day. All right. So that's what's really cool. If you are not attached to it, not emotionally charged about it, yesterday was a great sale. And some people invite, see if you can put 1% of your portfolio in when it's a red day. Okay. And so if you got a $10,000 portfolio, that means putting $100 in. All right. So have the discipline that when it's very red, buy something.
So when it's going down, how much does it have to go down before it's considered a red day?
Red day is like, it could just be down 5 points.
Oh,
so
okay.
anything that's down is called red. Anything that's up is called green.
Oh,
Yet yesterday was a major correction, not to the degree that technical corrections, which are called 10%. Yesterday was, again, about 3%, yet it created a buzz, and some stocks were down 8 to 10%. Yesterday, the airlines got beaten, the cruise lines got beaten, and a couple of the high growth companies got beaten. And today they bounced back. So Carnival Cruises was one of them that I think you had about a 15% swing. Oh, wow. And so that, as an investor or as someone like us that are sort of involved in the markets but not living off of the markets, when it's a red day, nibble. And I think that's a nice thing for you to explore over the next 3 months. Because if you get 2 or 3 red days in a row, it's okay to have a little nibble, if you've got some powder dry. And that's one of the things that People who put everything in and they're borrowing and they're leveraging, they're the ones who tend to get hurt when the market's correct. All right. So that's a little bit of what's called, again, management, time management, risk mitigation, and also some type of trading and investing. And that's a little bit of what you want to be doing, is investing, perhaps dollar cost averaging. If you said over the next year, I'm going to put in $500 a month for the next 6 months, that's $3,000. That might be a nice little simple strategy. You might decide at the end of the next year you want to have 20 grand in the market. Then you just shift it up and make like $1,500 a month. That's called dollar cost averaging. And it's a pretty effective strategy. And what happens also, Sharon, is when you start owning perhaps like a few hundred shares of the banks, there's something called a dividend reinvestment plan that instead of you receiving the cash, you ask them to reinvest the dividend and they'll buy the shares for you on a regular basis. That, for people that are starting out investing, is one of the greatest ways to really tap into wealth creation. I've had accounts go well into 6 figures over 10, 15 years just by doing dividend reinvestment.
Okay.
And so with that, any last questions, Bill?
The next thing I'd like to learn for future episodes is the whole thing of using your TFSA and like within Wealthsimple and just understanding all that concept, because I know there seems to be a lot of positive information on that, being able to use your dividends, reinvest them, and not be taxed on it within the account or on the withdrawal. So just the difference, I guess, with using that route versus, say, your RRSP, where you're taxed on the withdrawal.
Right. TFSA is a great way to have some of your money grow in a tax-friendly environment. So yes, definitely something we can talk about. You're right. With an RRSP, when you take the money out, you will be paying taxes.
Mm-hmm.
Yeah. But you can check out with your CRA and find out how much you can invest in your TFSA. You might actually have up to $60,000 available to put in there. All your dividends, your capital appreciation, it's tax-free. So it's quite an attractive vehicle to use to create some wealth.
So when you invest in stocks and you're using do they have to be stocks that are registered that you can use TSFAs in, or is it any stock? Like, is it a particular way of doing it?
When you log on to Wealthsimple, and it's very simple, and then again with my mom, we started out with $500 transfer. It takes 3 days, and we wait there, and we put it into a TFSA for her, and so she had the room, so we put it in the TFSA. You can either have an open account or a TFSA account. I'd suggest the TFSA if you've got the room, and then you'll see there's a lot of companies that you can invest in Canada. Mm-hmm. Yeah. Okay. I wouldn't say all, because there are some that might be on the border of Vancouver and Calgary that aren't necessarily in the full market, and those might not be available. But okay. Most are. Like there's probably well over 1,000 stocks that are available on that.
Okay, good. Yeah. That sounds good.
Any final questions? Sharon, I think that was a fun session. Thank you so very much for playing the baby boomer invest for retirement game today.
This was very enlightening, and it's really taken my fear away. It sounds like fun. The way you're just, it sounds like fun, and it'd be nice to support companies that I believe in, but also to own companies that I use.
Absolutely. That's the fun thing, I believe. And then you never know. It creates even energetic cords. It creates relationship. It enhances education and wisdom, experience. And it's something that could really grow. I think Bill's done that very well with Shopify. He's really developed a relationship with Shopify, with Amazon. And for him to have a little stake in it makes a lot of sense. Now he's got to get his timing right when he starts making the investment. I'd like him to have 5 shares of of Shopify in the next year. Yet 5 shares is $10,000. Yet over the next 18 months, if he makes a little contribution, especially when it has dipped, because Amazon is very consistent. Amazon is growing, but it's looked like it's going to go from $3,500 to $4,500 in the next year. Whereas Shopify, it's like $1,900, $2,000. It could go down to 12. It could go down up to 2,500. So there's a lot more volatility with Shopify.
Okay. The next question I have is, do you have a site that you use to watch the shares on that you prefer?
Well, I've got 2 or 3 screens open usually. Yet again, when you use Wealthsimple, that's going to be a screen. When I have my Royal Bank account open, it's a screen. It's got all of them. I also use Yahoo Finance, and so those would be 3 that could get you started. Bill, have you used Yahoo Finance at all?
Yes. Yeah, I'm Wealthsimple and Yahoo Finance.
Okay. Oh wait, that sounds good. Thank you.
All right. Well, thank you very much, and we'll stay tuned to Continual Shift on YouTube, Lead Pedal Radio, which is a wonderful radio channel that is broadcasting our shows. And thank you so much for joining us for Canada Startup Today. Have a great week and a very prosperous one ahead.
Thanks, Dave. Thanks, Sharon.
Thanks, Dave.